Welcome to the Property Regeneration Podcast. In this podcast, we discuss innovative products and services that meet either local, social, technological, environmental, political, and legal needs within the construction industry or property market. Introducing your host, a property developer and investor, Rachel Gross.
So welcome back everyone to the Property Regeneration Show. Today here with David. David, do you want to introduce yourself and let people know a little bit about your organisation, how it was founded and what type of service you provide to the property market or construction industry as a whole?
Well, thank you very much, Rachel, for having me on the podcast. David Johnstone is my name. I'm the Managing Director of Neo Property Crowd. We are a property crowdfunding platform based here in Moorgate in London. My personal background started off initially in advertising and marketing. I worked for a national newspaper in Northern Ireland, then became a marketing consultant offering services to startup and small businesses. Then got into property just around about 2000. That was before the spike that we had and then the crash that followed. So I originally got into buy-to-lets in Northern Ireland and a few in Scotland. And myself and a few friends got together and we actually purchased 23 properties in 18 months. And I often tell people that the most expensive property we purchased was £38,000, which seems a very small amount given what the property market is doing today and average house prices in the UK. But that's what the market was back then in Northern Ireland. Within about 3.5 years, the cheapest property in that portfolio was 138,000. Such was that initial growth in the property market. I actually then went away with the British Army and the Army Reserve to Iraq in 2004. And when I come back, the housing market had just completely gone through the roof. And I realised that the rent was not going to pay the interest payments. So we stopped the buy-to-let market. Moved overseas, did some overseas off-plan, second home for investors. Then got involved with Stuart Law and the Assets Group and helped market some of his stock over in Asia through property agents. For the last 5 years, I've been working with clients on building high-end property portfolios. And that really moved me into this exciting world of property crowdfunding.
Okay, brilliant. So coming into the property crowdfunding side of stuff, what were your thoughts about the market that you were entering into and how has it evolved from when you started up to date?
So the market from 2000 to now, that 20-year period, there's obviously been tremendous change, not just in the market itself, but I think in the knowledge level of the average person. So I think when I first got involved in property, it was very much estate agents and very few people, I think, would have classed themselves as property investors. I think what's happened since with the advent of social media, obviously access to information online, and then of course a lot of property courses, I think have all contributed to a situation now where there's many, many more people who are part-time investors, full-time investors, and certainly many more people who make their main income out of some involvement in property investment. So I think that's probably the biggest change has been that education of people. And we're certainly very passionate to help develop education because times are changing very, very rapidly.
That's right,
and that technology changes and even changes in the law and compliance regulation. That all impacts on property investment. And therefore we want to keep educating people and making sure people know what the latest trends are within the property investment market.
It's quite interesting that you say that you're trying to educate people about the latest trends because at the moment there seems to be a little bit of a stigma around crowdfunding and whether or not it meets the Financial Conduct Authority's current regulations. What would you say is your unique selling point as an organisation in offering that crowdfunding service and how do you ensure that you're regulated within the FCA to meet their standards?
Yeah, really good question because there is, I think in some cases it's misinformation and a misunderstanding about what the crowdfunding market actually is and how it came about and what service it offers to people. And I think it's important. So really the FCA as an organisation have set the guidelines. So we tend to refer to it as like a sandbox situation where the transactions that happen between property developers and those who are looking to fundraise and investors happen within those guidelines that have been set by the FCA, which are effectively our crowdfunding platforms.
Yep.
The guidelines are there in black and white, but I think as always when it comes to these type of regulations, there's interpretation of guidelines.
Yep.
But the reality is developers have to be aware of compliance, financial promotions, regulation, and at their peril, they ignore the compliance side of property investment.
Yep.
And there are developers out there who I know are still engaged in activities that I do not believe meet the guidelines because they haven't perhaps been targeted yet. They seem to think that they're going to be exempt for some reason, but it's only a matter of time as the net closes and as guidelines are enforced. Developers will have to do business in a compliant manner going forward. And of course, you want to be in an industry that has compliance. You want to be in an industry that there are guidelines and there are rules. So I think crowdfunding for me, it's almost like the perfect storm.
Yeah.
You always have people who want to raise money for property projects.
Yep.
You've got people out there who absolutely want to invest in property projects. And it's the crowdfunding platforms that bring both those parties together in a regulated, compliant manner. And that's why I'm so excited by the industry.
Yep.
And I think it really does allow for the explosion of this industry in terms of where it can get to.
Yep.
But also through crowdfunding, I think, Rachel, opens it up to the masses.
Yeah.
Now, of course, let me emphasize, not every person can do property crowdfunding investment. You have to meet certain criteria.
Correct.
You have to pass an appropriateness test if you're doing equity. But it opens up to a lot more people who in the past could never do crowdfunding because they weren't an institution, they weren't a high net worth, they weren't a sophisticated investor.
Correct.
So I think the real power behind crowdfunding, it really does open it up to a lot more people, which I think is exciting.
Okay, perfect. So whilst on that topic, would you like to maybe elaborate a bit to our listeners the types of crowdfunding that you provide?
Okay, well, if I take...
You've touched on a little bit of equity.
Yeah, if I perhaps take the market in general, first of all, so you have two main types of crowdfunding in the UK. So you have what's referred to as the loan or the debt or peer-to-peer.
Yeah.
And that is really crowdfunding platforms that are effectively offering loans. So it's almost taken the place of banks or institutions. And then you also have equity platforms, which are not offering loans. They're simply offering an opportunity for someone to purchase shares in a SPV, a special purpose vehicle that owns the property asset. And they become a shareholder as opposed to having a loan relationship. And then in the middle, you have this thing called a property bond, which we are particularly interested in because we feel it offers an opportunity to almost have the best of both worlds. So it looks like, smells like, tastes like, and feels like debt because it has a fixed term and offers security. But you can build in terms of a convertible bond and have like an equity kicker involved in that bond. So they're the main parts of the market in general, and we specialize in the equity and the bonds.
Okay. So kind of leading on to that, the masterclasses provided by yourselves, would you like to maybe go into a little bit of detail of how the masterclass came about, a breakdown of what you're actually teaching with this masterclass and what the positive outcome has been from people who've attended your masterclass?
So the driver behind masterclass was really very simple. As we talked to developers and to investors, there was just a real lack of understanding and lack of knowledge about the crowdfunding industry. Developers didn't really understand it. They had heard of it. And there was such a variety of views as to what it actually is and how to benefit from it. And more people were asking us to either train their staff or to even work with them as consultants to prepare for a crowdfunding campaign. And it just made sense then to offer that service and be paid for it. At the end of the day, we're not a charity. We're in business to make money.
Right,
And the reality is we just had people queuing up to ask our input and really just provide the knowledge that we had developed. And I think the key thing, I think, Rachel, is that you have to understand the psychology of crowdfunding, not just from a developer point of view, but also from an investor point of view. What are investors looking for in a property investment opportunity? How do they want to engage with a platform? What do they expect from the platform? What level of service do they expect? What's the functionality of the platform? They're all very important aspects of this relationship. And all too often people don't even think about that. They just come with a project to a platform and expect somehow magically that money will appear out of nowhere and fund the project. Whereas in reality, the developer needs to have a brand presence. They ideally need to have some of their own investors to bring to the platform. And then if they have credibility and a track record and bring some of their own investors, that's when the tribe of investors on the individual platform will engage and get involved. So really masterclass grew out of that. It's brand building services. It's education services. And we certainly feel on the investor side, and we run investor workshops, for instance, and that's about not giving advice, because of course we're not giving any advice to investors as to what projects they should invest in, but it's educating investors to the benefits of investing through crowdfunding platforms, of which there are many, but I think the biggest one is crowd validation. When you have hundreds of people looking at a project, then you're going to get a far better due diligence experience. And I think that in itself is one of the major benefits of property crowdfunding.
You mentioned crowd validation as one of the platforms. What other platforms are out there that, in a sense, feed into this masterclass, or enable people once they finish the masterclass to go out and start engaging with these social media tribes, as you call them, for funding?
Well, we originally started a reward-based platform about 3.5 years ago, and that led to the creation of our masterclass crowdfunding arm. So we have absolutely consulted to people who have then used other platforms than ours to fund projects. So we feel we've helped the industry in general, and we're happy to do that. In terms of other platforms, I think there's a variety out there. Some very, very good platforms, and others that are still learning, developing, and perhaps could do things better. But like any industry, you need a number of platforms, and collectively that just increases the footprint of the industry.
Are there any examples you can give where your masterclass has benefited a developer quite well in terms of crowdfunding their project? And I guess probably give a small project, an example of a small project, medium project, and a large project, so people can get the spectrum of how they will benefit from attending your masterclass. Okay,
so I'll give you two examples of companies that we have consulted to, who are now have projects that are ongoing. So we are still a relatively new platform. We only started in a pre-launch stage last November. So we don't have a huge track record of successful projects within this brand. But if you take two companies, for example, one is a company called Aparo. They have just launched a property bond on our platform. So we consulted to them. They are a new company. They've got about 150 years property investment experience in their executive team. So these are all really serious property people, but it's a new company come together, and they actually have in the field of prop tech, which is very much a buzzword now. They have an algorithm that kicks out below market value stressed property. And what I mean by stressed property, it's property before it becomes distressed. So if they can get in and identify properties like that, then they can buy them well below market value. So we consulted to them, and what that consultancy involved in was literally helping to build their brand. The guys behind it, you're on podcasts, landing pages, literally reaching out, blogs, and it's just about gaining awareness of who they are and what they do. And they're currently doing a 2 million raise. Another example of a client that we've worked very closely with and helped them move into the crowdfunding space is the guys up at Fitzwilliam Capital Partners. They're based in Cheshire. Darren Gibson is the main guy up there. And They have a very well-established brand within the developer world. They've about 37 million GDV over the last 7 years of projects, but they've never moved into crowdfunding. And they were keen to have other sources of finance to do bigger deals and to scale up.
Yep.
So again, we work with them on a consultancy basis, looking at their current model, seeing the benefits they could get from reaching out to a wider investment tribe. They saw crowdfunding as the route to do that. We do that through using case studies.
Yeah.
I think, Rachel, this is a really interesting angle on crowdfunding that I don't see other companies really focusing on.
Yeah.
So we encourage them to put a case study on our platform, which is just a previous deal they've done. There's obviously no investment can go into that deal. But what a case study does is, first of all, it gets some presence on the platform. So the existing investors on the platform can start to look at Fitzwilliam Capital, see the team behind them, see this deal that was very, very successful. But it also means that they can drive their own investor traffic to the platform through their own social media. So they're starting to build awareness of their brand, build credibility, and they, having done some case studies, they are now about to launch a planning gain project where they're going to raise just over 100k for a planning application. They're going to be offering over a 40% return to the investors in 12 months. And then they also are launching a property bond where they've identified a portfolio of stock that they can purchase at about 25% below market value. The stock's built, it's already tenanted and bringing in a very lucrative rent roll. And therefore they can bring that now to the investor tribe and seek to fund that. So they're two examples of people we've worked with as consultancy who have now moved forward and are actually have projects on our platform.
Why do you think large organizations are moving away maybe from the traditional way of funding, perhaps whether it's through government or a single investor, and now they're choosing to go for crowdfunding? Do you think crowdfunding offers the opportunity for a faster way to getting funds to get the project rolling? Why is that? And do you think, because there's a slight stigma, if you have too many investors involved in one project, then there's the likelihood you're less likely to manage their expectations. And how do you deal with the first charge and second charge in instances like that? How do you get people to change their mindset to see the positives for the crowdfunding route?
Yes, very, very interesting question, because that is at the heart of why crowdfunding has arrived and has really exploded. And property crowdfunding within the world of crowdfunding has been, one of the fastest growing sectors of crowdfunding. So what are the main drivers behind crowdfunding? Why are more people turning to it? I think part of it is the outworkings of the credit crunch still, where after the credit crunch, banks and financial institutions changed how they view lending. I sometimes humorously call it the computer says no syndrome, where someone behind a desk simply inputs a bunch of information, presses a button, and the computer either says yes or no to the lending. In recent years, more and more developers, when they go through that process, are receiving a no from the bank. So that has then, I think, immediately driven people to the world of alternative finance. So if I can't get money from a bank or an institution like I did before the credit crunch, when banks were literally throwing money at developers, how do I now get money? So people are now looking at alternative sources. The big problem with going to investors directly, which was usually the option number 2, is regulation. As soon as you involve more than 2 investors in your project, then you're potentially falling foul of collective investment schemes. And you're immediately on very, very dangerous ground when it comes to the FCA guidelines. So if you can't get it from banks and institutions, and you can't get it by going direct to investors, there isn't that many other ways of getting it. And crowdfunding means that you can bring your project to a crowd of people, present it in a compliant manner. And if you have got a good story, if you've got a good project and you've got credibility, then you can build an investor tribe that can follow you for years to come.
And in this investor tribe, just going back to my point about who takes the first or the second charge, how is that worked around when it's a crowd? Because it's normally easier when you've got maybe 1 or 2, maximum 3 investors investing into a project. You can somehow distribute, whether it's through shares as we're discussing, or through the property itself. But how do you deal with it when it's a huge crowd? How do you guarantee that return on investment?
So this again, I think, is one of the advantages of crowdfunding, because there are different ways that you can structure the investment vehicle. So if you were doing equity, then the issue of a charge doesn't really come into play, because the investor is receiving shares. So their security, inverted commas, is the fact they have a share in an SPV that has purchased a property asset. Now, if someone's then on the lending peer-to-peer debt side, then the charge, the first charge is as it would be really for a bank lender, i.e. that would be a first charge to the lender. The bond again offers that middle of the road where sometimes a bond has a second charge behind senior debt, but more often than not, it's a first charge. But really, it's up to the investors to decide if they're comfortable investing or not based on the terms. So a developer can bring a project. If it's got first charge, well then obviously it's more attractive. But if the overall project stacks up and they can only offer a second charge, well then the investor can choose based on the information if they're comfortable taking that risk. And I think this is one of the beauties of crowdfunding, Rachel, that the responsibility and the onus isn't on the developer. It isn't even on the platform. The investor, they look at the information, they make the decision, and they press the button if they're happy with what's been offered to them.
So just one last question then over to you. If you'd want to add a little bit more about the services you provide, where can people go to follow yourself and find out a little bit more about this masterclass in terms of signing up?
Okay, well, I think over the next couple of months, you're going to see our brand really explode across the different property outlets and across the UK. I work very closely with a guy called John Corey. John's a very, very well-known property expert. John's originally from the US, worked in Silicon Valley, actually worked with Steve Jobs. He runs a monthly meet in London on the second Tuesday of every month called Property Fortress. And he and I have planned a series of podcasts, a series of online sort of Facebook Lives where people can come on and ask us questions. And we certainly intend to grow that presence and engage with more and more investors. Our website is, our platform is www.leopropcrowd.com. And from there, there's various videos, there's information about some of our education, and that's really the first link to us. We're, of course, on the other social media channels, but really the platform is the best place probably to reach out to us. But we're always happy to engage. We run monthly workshops where often we bring other platforms as well to come to a workshop so that potential investors can hear from a variety of platforms, because every platform is different. There's no uniqueness necessarily in platforms, and it's a matter of, I think, education. It's just engaging with investors and with developers and letting them see the potential. I'm very, very passionate about property crowdfunding. I've been in this arena for 20 odd years. I've seen many people make mistakes. I've seen people lose money. I've lost money in property deals before. And I just really believe that property crowdfunding offers a transparent mechanism for developers to raise money and for investors to invest in property. And I'm just really excited by the future and where this industry can go.
Brilliant. Thank you very much. So was there anything else you wanted to add to this discussion to enlighten our listeners?
One of the most important things I would just recommend people to do is to do some research. Don't jump in to this market, whether you're a developer, whether you're an investor. Take your time and become educated. I think there's never a reason not to learn more about the industry you're involved in. And I think all too often developers sometimes jump in. They've maybe been sold something that they just put your project on a platform and it's going to magically get funded. And yet we know in business that's not reality. So I'd say developers, study it. Look at platforms, look at those that have had successful projects. Have a look at how they've managed to do that. I think invariably you'll find there's been quite a few weeks of build-up of awareness of the campaign before it launches. I think that's the key. And the same for investors. Again, it's just education, understand the nature of investments, understand the nature of property investments, and then understand the benefits of using a crowdfunding platform. We're talking diversity, the fact that it's FCA compliant, the choice you have as an investor. I think they all make it a very, very strong proposition for investors.
That's such a good point, because as we've been talking, I'm sure a lot of our listeners are aware as well, the property market and construction industry is forever changing, and things like the credit crunch, or whenever there's a downturn in a market, the first industry that's normally hit is the construction industry. And when it's hit, there's always some form of change to regulations, and it's very good advice to continue educating yourself and keeping up to date with those new regs, and how you need to maybe alter your business model to cater for the existing market. Just touching on that, with Brexit coming up, how do you think that is going to affect crowdfunding? Do you see a surge in that, or perhaps not so much?
Well, I come from Northern Ireland, so the Brexit debate is probably even more intense there than it is in most parts of the United Kingdom. But I think of course it's going to have an impact. What that impact is the $1 million question, or the £1 million question, I suppose, is to say in the UK. The reality is, whether it's Brexit, whether it's the economy, whether it's global factors, every single era, every single 5-7 year period in property is going to have things that impact it. So to be honest, I'm quite relaxed about Brexit. I'll not disclose whether I was an in or outer, but the reality is that you always have to be able to adapt. And the mindset I've always had in property investment, having been through the initial explosion in early 2000 and watching house prices just go through the roof in Northern Ireland, to then the crash, to then people can't get money, to see developers go out of business. My mindset is, you prepare yourself for change and just try and be ahead of the change that comes. And if you can position yourself, they often say in these property courses, you can make money in any market. And that is true. You just have to adjust your strategy to suit the market. So I think, in terms of Brexit, whatever's going to come down the line will come down the line. We have a very simple saying in Northern Ireland that what's coming for you won't go past you. So Brexit's going to work itself out, whatever happens. And it's just about being ready to deal with that, and whatever that be. So if we somehow remain in the EU, then we have this, pan-European crowdfunding association, and we can do business right across Europe as you can currently. If Brexit actually happens and there's a break of some way, that might open opportunities in other markets. So just wait and see, and be ready to take advantage, advantage of what comes your way, and make sure it benefits you.
Okay, brilliant. Well, thanks very much, David. It's been a great pleasure having you on the show. And I'm sure our listeners will be Googling and making their way to your platform to find out a little bit more.
I'm here to interact with anybody. And certainly thank you for the opportunity. And hopefully in a few months' time, you'll be back again for an update. And we look forward to that and engaging with you on into the future, and every success with your podcast.
Brilliant. Thanks very much.
Thanks for listening to the Property Regeneration Podcast. You can follow us on LinkedIn, Twitter, Instagram and Pinterest, and contact us on contact@propertyregeneration.co.uk for more content and to have your questions answered. Until next time, adopt innovations to accommodate the growing population.